Thank you very much. We would now be launching the white paper on alternative data sources. Do you all know what are alternative data sources? Well, let me tell you briefly. Alternative data encompasses both publicly and privately available information that can be ethically collected. So the operating word here is ethically collected. It encompasses non-traditional data sources that insurers can leverage for policy underwriting, risk management, and informed decision-making. Authored collaboratively by the Institute of Actuaries of India, the India InsurTech Association, and with significant support from PwC India, this white paper presents a comprehensive framework. It aims to identify and assess alternative data sources within India, considering their use cases in both quantitative and qualitative metrics. It aims to integrate alternative data sources with various insurance processes like claim settlement and underwriting, and it establishes and maintains a regularly updated repository of these data sources. I'd like to invite our President, R. Arunachalam, to kindly come on stage and share a few words on this launch.
Thank you, Kritika. In the morning, I mentioned about two MOUs with IFSCA Gift City as well as NHA. But all prior to that, we had another MOU with India InsurTech Association sometime in the middle of last year. I'd like to invite Prerak Sethi over here. Prerak? Prerak is a co-founder of India InsurTech Association, and he's been instrumental in helping us to where we are in this alternative data sources white paper. And in fact, we had created a working party in the mid of last year. One of our senior council member, Mr. K.S. Gopalakrishnan, and one of our very technically qualified and an energetic and entrepreneurial member, Sumit Ramani, came to me last year and said we should have a working party on the InsurTech. And I was very happy that we're getting over there. And we created a working party with the support of Prerak. I would like to invite the members of the working party as well for the launch of the white paper. Sumit Ramani, the chairperson, Abhijit Pal, Anjani Chowdhury, Amit Tiwari, Devadeep Gupta, K.S. Gopalakrishnan, Karan Vashisht, Sunil Padasala, T. Balachandra Joshi, Hital Shah, Sahil Aguja, and also my staff, Binnita Rautela, who is the executive assistant for this alternative data sources working party. I must be failing in my duty if I don't thank PwC enough. They have been instrumental in getting this so far. Thank you, Hital, and the entire PwC team as well. With all your permission, we launched this alternative data sources white paper done by the working party in association with India InsurTech Association. Prerak? It's an InsurTech Association, so you will get a soft copy with a QR code. Sumit, the hard copies you will get, or they'll get the soft copies? You can announce that.
The soft copies are already on Institute of Actuaries website, and I think we also have a QR code that we could display now, and those interested could download it right away. It's free, you can take it away. Thank you.
Thank you, Prerak, and the entire working party.
Thank you. Our next session is on InsurTech and Disruption. For this session, Sumit, may I invite you back on stage to chair this session. Sumit is the co-founder of ProtectMeWell India. Joining Sumit today, we have panelists. Can I please invite Mr. Mitesh Jain, Symbo India Insurance Broking Private Limited, India, Mr. Ankit Kamra, founder, COVRZY, India, Mr. Karan Vashisht, Chief Product Officer, Zopper, India, Mr. Ramgopal Subramani, Chief Strategy Officer, Perfios Software Solutions, Mr. Prerak, founder, RAI Insurance. Please join us on stage, and the floor is yours.
While we get settled, I think let me not waste any of your time and give you some bit of context. In 2019, it was the first time I was speaking at GCA, and the topic was on InsurTech and Actuaries. And since last 5 years, every talk of mine at GCA or otherwise has been focused on InsurTechs because that's my area of focus. In 5 years, I've ran out of things to talk about, and hence I have 5 more speakers to talk about it today. But on a more serious note, right? In 5 years, if you look at across the globe, the poster boy of InsurTech, Lemonade, went for an IPO. A couple of InsurTechs, including Hippo, acquired some of the insurers. Closer home, Policy Bazaar, which didn't get quite attention in the earlier days, went public and now is closer to become profitable. India InsurTech Association started 3 years ago, has about 230 odd members as part of InsurTech ecosystem. 2 tech-focused insurers, Echo and GoDigit, have now got license for their life insurance arm. And so essentially a lot of things have happened in the last 5 years or so. But if you look at from customer lens, probably not a lot has changed, right? So why this dichotomy? In one way, you see a lot of actions happening, but maybe not a lot of change in experience of customer. So has InsurTech really done disruption? Is InsurTech all set to do disruption? We'll figure it out in the next 25 minutes or so. I'm joined by Karan, Mitesh, Prerak, and Ankit. Maybe I'll start with Prerak, who wears 2 hats. One of founder of RIA Insurance and second co-founder of India InsurTech Association. Prerak, you have been seeing this ecosystem very, very closely since last 3 years. If you could give everyone in the room an idea of how this has evolved over a period of time, and how does it compare with more mature markets like US?
Thanks, Sumit. So it's actually interesting as we look towards India and how far the InsurTech ecosystem's come along, right? So Sumit's absolutely right. If you look at 3 years ago, 4 years ago, there was very little conversation around the word InsurTech. There was a little bit of conversation. And here we are at the India InsurTech Association. We've got 230 members. When we say we've got 230 members, right? These are members that are reinsurers. They are licensed life insurers, general insurers, Sahis in India. They tech-driven insurance distributors, but with broker license, corporate agency license. We've got pure play technology companies that have come together. And what's also happened is there are a bunch of other consulting companies and service providers that have come together to say we are part of this ecosystem. So what does the ecosystem mean, right? As you can see, we've got all these different stakeholders, including partners like the Institute of Actuaries of India, that are now saying, how do we come together to take this ecosystem forward? How do we all collaborate with each other? So I think we should all give ourselves a hand here that 3 years later, there's a lot of collaboration actually happening. So thank you to everybody here who's from all these different stakeholders that have come together. It's absolutely amazing what's happened, right? As we look at the progression of the type of insurtechs, again, as I said, we've got insurers that say we are insurtechs. I think the reinsurers are saying we are insurtechs. The tech companies are saying we are insurtechs. But as that progression's kind of happened, in India, historically, we had Policy Bazaar, kind of the big poster child of insurtech that was distribution focused. Even if we look at 4 years ago, a lot of the newer players that came into the market came in on the distribution side, right? They said, let's drive technology and data. They were focused on now moving beyond, say, retail insurance towards employer-employee covers, moving towards group affinity covers, moving towards saying, hey, can I actually do distribution on the ground, even in rural areas of India? That's a progression we saw. But if you look at the member base now, the kind of members that we have, right? We've got pure play technology companies that are focused on building solutions for underwriting, building solutions for claims, building solutions for, say, enabling pure play policy admin systems also, right? So across the board. So there's been a lot of progress from an India standpoint, but I would say the journey has just begun. So if we look at the domestic market, let me start with that. Still, we've got hundreds of risk pools, right? Micro risk pools that I think are today underinsured. Whether it's we are looking at, say, home insurance, or we are looking at, say, livestock insurance, or we say cyber insurance, these pools are uninsured is what I'll say, or new completely, right? Because we barely covered them. So in the next 2 to 3 years, what we would expect to see from an India standpoint is a lot of insurtechs that come up and say, hey, for a particular risk pool, how do I think about creating a value proposition that goes across the entire insurance value chain of distribution, underwriting, risk management, claims, servicing, and how do I collaborate with insurers, reinsurers to actually go take coverage to the last mile? So that's one big trend. The second trend from within an India standpoint that I think we expect to see is that SMEs and corporates have seen less, say, insurtechs going after the sector. That's just started to change in the last 12 months. We are seeing insurtechs coming up in that are catering to, say, liability insurance, and saying, hey, let me go cover now fire and burglary insurance. So that's a second set of innovation that we expect to see in the next 12 to 18 months as a wave. As contrast to Sumit, to your quick question around the US market, I was in the US in the month of October, went to ITC Vegas, which is the world's largest conference for insurtechs, about 9,000 people, full football field full of startups exhibiting there. I think that market is just so mature. Unlike India, where we're talking about solving for penetration as a problem, that there you've got companies that touch on a minuscule part of that value chain for a very small segment in maybe 5 states and are still decently large companies. Everyone there said, what's happening in India? That was the only question they really had for me. When I said, what's happening in the US, they said, forget that, what's happening in India? So great time to be in India, great time to be building an insurtech in India for the domestic market or for the world, is what it said.
Thank you, Prerak, for that wonderful overview. And as Prerak rightly said, we are only getting started. And it's probably the right time for us actuaries to start thinking about it. And we'll get there in a bit. But getting more focused on data side of things, moving on to you, Ram. Ram, you have interesting experience of working both with banking industry and insurance industry. In particular, you work with data a lot, in some cases alternative data, making customer journey a lot more easier, underwriting faster and efficient, claims process more efficient. In your experience, how the two industries, maybe if you could give us an insight on how these two industries are different in terms of adaptability, agility, and embracing innovation.
Sure. Hello, am I audible? See, first of all, I think we start with the part, in God we trust. Everyone else brings data. So as actuarians or even risk management, it's about the quality of data. And if I look at the partners in the last decade or so, okay, what is kind of, our journey over a 15-year-old company, and in our journey which started with banking, and as we've kind of also started working with insurance firms in India and across the globe, part of it, what we kind of have largely gone out about it is everyone has had process orchestration, right? Whether it is you're onboarding a customer for a life insurance product or for a motor insurance product or a health insurance product. You have the process of capturing information. I mean, there are very nicely designed flows. There are obviously web apps, mobile apps. There is point of sale apps, okay, right? Then the information comes to a human in the loop. An expert, a processor who looks at the information that is submitted, assesses the information, and then you have someone who goes and validates or verifies information. So what we have seen is, over the last decade, as data has become available digitally, it has become obviously accessible on a real-time basis. The process orchestration has got augmented with decision orchestration. When I talk about decision orchestration, just the part is obviously in India with the whole digital public infrastructure coming all the way from your Aadhaar, UPI, right? Now the account aggregator, and many of these parts coming in, and a lot of the digital public sites being there, we can get information. So just the fact is establishing identity, establishing address, establishing profession, employment, correct? And eventually credit assessment in terms of ability to pay. And obviously as we come into other aspects of risk assessment, whether it's health or this thing, right? So what is fundamentally been able to achieve at scale today is, we are first of all, in the process orchestration, it was information and supplemented by documents. It could have been your ID document, it could have been your Aadhaar card, it could have been your pay slip, it could have been an income tax return or your bank statement, or even let's say hospital records, bills, right? Okay. Reports. So today, all of these to a large extent are extracted digitally, annotated digitally, which means if I take a medical bill, hospital bill, a line item to say whether this was a room charge, whether this was a consultation fee, was this a procedure, what was the medicine given, okay, to that level we are able to annotate. Now once we are able to this thing, so the unstructured data, which was in various forms, right, got converted into a structured data set, and then a semantic meaning being applied to every attribute of the structured data set created what is called as a smart data set. And now insights and analytics has been built on that part. So that is the core aspect of it, which now roughly around 700 to 800 data sources are there just in India, cutting across varieties of it. So what does it actually change? It is transformed in the way a customer can be onboarded, a customer can be assessed from a risk perspective, a customer can be assessed from a reliability perspective. Is he going to be a repeat customer? Is he going to pay? Is he going to renew his policy every year? Correct? And then eventually assessing the quality of the claim documents, and then primarily being able to educate as to what is the exact quantum to be given. I mean, there is one part of mine which is the consumer and the pet peeve, and which is where my aspect is, we as individuals, when we take insurance, right, we don't get assurance, we get insurance. And most of the time, especially in the context of the health insurance, which is one of the areas where we are working in to a large extent, is about, can we quantify the level of misuse by hospitals? Because when you are categorizing today, what we have seen is, and this is something which we have done with Prudential in Malaysia, Indonesia, we are doing this now with some of the private insurance companies in India. We have been fundamentally building out the whole infrastructure or the algorithm for fraud-waste abuse, right? And we do see anywhere between 14 to 15% fraud, which is the thing, right? And who pays the maximum price for it? It is not the insurer, it's not the hospital, it is the individual. Now, then we ask the question is, why do people not take insurance, right? So, as and prior to this discussion, we were having this chat among all of us, right? One of the question was, now that we have data which we can trust, can we get to the point of having a much more granular, cohort-based pricing policy, right? So that we are able to serve the interest of the individuals much more better, at the same time make money as an insurer, right? And also basically eventually do social good. So broadly, with the data, what we have seen, see, just to give a, from a banking perspective, today, a bank is able to give a loan as low as 5,000 rupees. Unimagined, right? Okay. Now, today there are banks, NBFCs, who process loan as low as 5,000 rupees to something like 50 crore. Completely digitally in a straight through process with obviously a high level of fidelity. Obviously, in any industry, as technology comes in, there also risk comes in, fraud comes in. So mitigating fraud becomes a challenge. So if you look at it, today data is available which can help you source your customers most effectively, mostly entities, not individuals, because individual comes under the ambit of PII. But if you think about MSME insurance, right? You look at group policies, right? Corporate policies to MSMEs or enterprises. Those becomes a part of it. Then obviously the entire onboarding, whether it is general, auto, health, life, right? The whole journey can be made a lot more simplistic. I was just talking to Karan about as they're building on the part of onboarding hospitals, clinics, right? Now just the part is your GST data tends you the identification of what is the HSN, is this genuinely, is this really a hospital or not, right? At that level data is there, which makes verification much more simpler. Then obviously comes the whole underwriting and account aggregator fundamentally makes access to data a lot more easier. And then comes the whole claims part of it, whether it is a large part of it today is on the health claim side part of it, which we kind of are addressing. So I would say we are today, I think Nandan talked about this probably a few years ago, we are a very data rich country. And we also have a lot more insights. It is about how do we kind of apply to be a lot more effective industry and society. Thanks.
Thank you, Ram. Thank you for that detailed response and highlighting the importance of data. And staying with the data theme, more specifically on alternative data sources. We launched just a white paper 10 minutes ago. And I understand, Ankit, you at COVRZY has been using alternative data sources in designing your products and trying to solve multiple problems. So if you could also enlighten us and give us more insights on what and how you've been using alternative data sources.
Firstly, thanks, Ram. Sorry. Hello? Is this better? Thank you for the question. I'll break this question down into two parts. One is alternate data and the value creation, how we are utilizing in the entire value chain. We are using multiple open data sources to make sure we understand our customer persona better. These could be your open data sources, right from government data feeds to GST to KYC to other data pools that are available on the market. This helps us simplify the entire onboarding journey and makes the smart onboarding forms which automatically populate your data collection, which customer has to fill. Now, since we are simplifying B2B insurance on the liability side, a lot of this process takes about 1 to 2 weeks of back and forth between the right POCs and a bunch of offline paper form filling for customers to get understanding of what sort of product they are buying. The second leg is once this data is filled up, it goes to the underwriter for evaluation. And this is where we present a holistic picture to the decision maker that this is the kind of risk, the profile the customer is coming from. By accessing the data pool, we understand where the customer is coming from, what sector they belong to, what industry, what category, whether they have 5 offices or 2 offices, what were their top 5 shareholders, for example, what is their average sales returns, and bunch of other things to understand the risk. Now, in the entire value chain, where do we fit this? One is simplifying onboarding. Whatever process took about 2 to 3 weeks, we have simplified it to half of it, wherein now it takes about 1 to 2 days for customers to just get to a quote or a proposal stage. Second is we are also presenting underwriters with much more valuable insights, whether the proposition is good enough for them to underwrite or not. And third is, of course, claims. They have much more insights to the end customer if in case any claims arises out of it. Overall, in terms of what it means for end customers is that they will spend less amount of time in paper filling forms and making sure that their time is being utilized somewhere else than just doing the paperwork on that leg of it.
Thank you, Ankit. That's a direct use case of alternate data sources. Maybe lightening the more serious discussion a bit, but still trying to remain relevant to the topic. Karan, for you and for everyone else in the panel, you have an actuarial background, Karan. You worked in insurance setting. So question to you, how has that helped you? And question to everyone else who could join in after Karan is, have you worked with actuaries or actual professionals in the past, and how has that helped?
Thanks, Sumit. Having worked in actuarial, how it has helped me is because right now I'm part of an embedded InsurTech platform. What we end up doing is building platforms for distribution channels where the insurance is embedded. How it has helped me is negotiate better with the pricing team, because we are also sometimes sitting with brokers, discussing rates, what kind of leverage do they have with the insurers while dealing with niche pools of risk that the customers have, because we end up building platforms for microfinance, we end up building platforms for banks, we end up building for digital lenders. So we are exposed to different kind of risk pools that are out there. And that's where having an understanding that there is somebody in insurance companies that you can approach for building better rates, given that there is certain characteristics to define these pools of customers, right? So that's where it has helped me. To answer your second question, I'll just take a jab at it. Working with actuaries right now is not, from a distributor point of view, we have access to a lot of data. This data ranges from demographics to background on financial information to holding what kind of insurance products they have had earlier also. Actuaries right now, if I particularly talk about India right now, we are, like Prerak said, we are at the distribution evolution phase. We are just building up the distribution infrastructure, and distributors not have an idea how can they leverage this data right now. Right now, we are more into building propensity models for these distribution channels. I think probably 3-4 years down the line is when we expect actual risk management to come into picture, and that's when I think we can take more help from actuaries.
Thank you, Karan. And before Mitesh, you answer that, just to also set context for the audience, if you look at InsurTechs, the innovations are happening more on general and health insurance side of things. And in terms of value chain, it's on distribution, underwriting, and claims. So that's why you do not see, we do, of course, could bring a lot of value in each part of the value chain, but a lot of innovation is still yet to happen on the product side of things, and underwriting is only being scratched, right? It's still at the earlier stage. And that's why you do not see many actuaries helping in, but well said in terms of negotiating with the pricing team or insurance company and utilizing that skill. Mitesh, over to you.
No, so Sumit, you touched upon what I was going to highlight further. Like Karan said, while we are right now in the distribution phase, there are two ways we can increase distribution in India, right? First, build better distribution channels, better experience. Second, build more relevant products, right? Today, unfortunately, fortunately, insurance industry is more a sales-driven construct rather than a marketing-driven construct wherein a customer comes and buys a product. We all try to sell a product. And to buy the product, I think Prerak discussed it in the beginning thing, can you identify more homogeneous micro-risk pools? Identify constructs which exist from a customer perspective, the perception of risk is high, identify those constructs. And that's where I think actuarials play a huge role, because as InsurTechs, we can bring in a lot of data which is available. We can also bring in a lot of constructs which in near future will be available, and we almost need dynamic actuarial constructs, right? It goes a level deeper than underwriting, wherein it's not just application of data. We don't even at times understand how do you use this data in the application, right? Every day new variables are introduced. And I think that's equally important, because very soon we will realize while building better distribution channels is great, the products need to evolve equally fast, right? And products have to be more relevant. Of course, the ideal would be, can you write a product n equal to 1 wherein every individual gets its product? But that's far. I think at least we need to get to a more and more smaller homogeneous risk pools and write for those cohorts. And I think that's where actuarials play a key role, because, and right now I think actuarials are helping us a lot, wherein they'll have to be open saying we'll almost start making dynamic constructs which can take new variables into underwriting, right? I think that's the next immediate need which we see is right out there.
Prerak, you had long associations with actuaries in the past, so if you could chime in.
Yeah, I think most of the points have been covered, but it's absolutely true. From the other side, I'll just say, actually, by the way, the InsurTechs, as the InsurTechs are coming up, very often when I talk to some of the other founders, we quickly start to realize that we don't fully understand the economics of the insurers and the reinsurers. So I think equally importantly, just to add to that, I think actuaries have an important role to play from the other side to help InsurTechs understand that how does an insurance company make money? How does a reinsurer make money, right? Because InsurTechs tend to be wanting to move fast, wanting to break things, wanting to say, hey, give me, A, B, and C very, very quickly. But if you don't understand the other side, that means there's a big gap. So actually have a critical role to play to help the InsurTechs understand and say, hey, think about how does each stakeholder make money? And then what are the ways to think about risk, right, that come from other side.
Yeah.
That's
Thank you, Prerak. So essentially, even if, let's say, the disruption is happening, let's say, on the claims part of the value chain, right? Startups or InsurTechs have a view on the amount of impact that they create. But actuaries could actually quantify the amount of impact this claim solution would create, and then also help them charge accordingly, right? So our skills would still be useful even in a claim setting or an underwriting setting, even in distribution setting in some sense. We've warmed up now, and I want to address elephant in the room, the most important questions, which I was trying to allude to in the beginning of my context setting. InsurTechs have been around for quite some time. When InsurTech started 3 or 4 or 5 years ago, there were aspirations, there were views on how the scale at which InsurTechs would grow. But reality is probably slightly different in terms of adaptability, in terms of business volumes. Mitesh, question to you. Why do you think there was a divergence between what you would have originally imagined and what you see in reality after 5 years?
See, I think if you look back, right, when we all started, we tried to replicate what's there in the Western market, right? I think most InsurTech started coming in saying we'll try to solve one particular piece of the problem. And very soon we all realized that as a country, we are far more behind in terms of penetration, adoption, etc. And we almost need to build a full stack InsurTech in that sense, wherein we understand right from, like Prerak said, if we need to understand the reinsurance math there, and then go all the way up to product. I think that is what InsurTechs have evolved into. They now hopefully better understand, and we all do better understand the overall value chain, the impact of the value chain, and the value of building a full stack InsurTech almost. And that's why you see a lot of InsurTechs have evolved into being full stack carriers, right? Still keeping the thesis of data and tech in there. They realize being a carrier makes much more sense because then you get the overall control. I think that's one of the key factors wherein we didn't realize that. The second is, I think most InsurTechs like us undervalued, and it's very well known, undervalued the diversity into the Indian market, right? Moment you move from a state to state or a pin code to pin code, the diversity in the risk, the probability of risk is so much that underwriting, distribution, everything becomes very challenging, right? While we all build solution keeping one particular audience cohort in mind, InsurTechs took a bit of time to evolve and bring themselves up to speed, saying we can cater to a larger market. And third and most important, again, I think every industry has done that, is all InsurTechs went from tier 1 to tier 4. It's in India, you have to come from tier 4 to tier 1, right? Probably in certain senses, which I think the regulator, the government, everybody is now pushing, so it's helping us. But these three major factors had slowed down. I don't think InsurTechs have diverged a lot from where they wanted to be, but I think it's a continuous learning curve, and we are all up there, right, on that curve.
Karan, you have been also around for quite some time, and if you would want to add your thoughts onto it.
Yeah, so I have been around in InsurTech for close to around 5 to 6 years. We initially started building direct-to-customer platforms, just like PolicyBazaar or let's say COVRZY was doing. Then followed by B2B platforms. Now we are into embedded insurance platforms. What we have realized is that the biggest discovery for us has been that we have been told that insurance is a push product from day one. It is still a push product. But the thing that we have realized is that customers ask for insurance. There is a population, irrespective of the platform they are accessing, whether they are coming through a microfinance institution, whether they are coming to, let's say, a Chroma retail chain, whether they are, let's say, going to a bank, they are asking for insurance. And usually, because of the challenging infrastructure, these journeys are not in place. They are not able to buy insurance as a part of the main product offering. And that has been the learning. Building direct-to-customer platforms requires a lot of push, a lot of marketing effort. But embedded platforms actually let the customer purchase insurance much more seamlessly. And that is where we see the challenge right now, because the infrastructure from the supplier side is not there, where we have customizable journeys, or the ability to innovate on the distribution channel front is missing right now.
If anybody in the panel wants to add.
Actually, I'll just add this point was what Karan was talking about, right? The demand is significant. I mean, as the part is just in the way, when again from a lending perspective, there is this whole salary advance or a payday loan, correct? Now, what is happening is there are players who give this payday loan, but they're kind of innovated with the digital insurance companies to give a 3 EMI insurance product. Basically a person not being able to pay their EMI because of either job loss or some health incident, right? Or accident, which is part of it, right? Now it's a very short tenure kind of product. Now, incidentally, and what we see also is, as we are talking to a lot of NBFCs, especially both on the, especially on the MSME segment parts of it, right? So there is clearly enough demand to create either provide to the proprietor a health insurance or a life insurance product, or even from an entity perspective, a GMC. So there are enough aggregation channels that have emerged today. And from a point of, one of the things that we've seen is just like the way payment has gone to the point of consumption, right? And the source of fund has moved to the point of consumption. These infrastructures have already been built, which are now fundamentally creating opportunities for multi-product sale on the same applicant, who is basically either a merchant being onboarded for a POS device to basically accept payment through a QR code or anything like that, right? At the same point of time, that merchant, if it's this thing, can be assessed and given an insurance product, right? Whether you're looking at a supply chain financing in terms of anchor financing, a PO being financed, like basically the government e-commerce marketplace, which does a GMV of roughly around, I think 6 lakh crores per year. And you have suppliers who are funding government, which is kind of guaranteed payment. It might be delayed, it might be 180 days, 240 days. But inherently, for those suppliers on their ships being good, a transit insurance being baked into the process, right? Or even a PO finance being with a credit insurance kind of product. So I think in the last 3-4 years, a lot of the public infrastructure, I mean the digital infrastructure, and especially with digital infrastructure like the OCEN, which is the Open Credit Enablement Network, or even the Open Commerce, ONDC coming in, and also the whole health insurance stack coming in, right? So there are enough infrastructures for reach to customer. It is about building, I mean, obviously the risk models and then the delivery model to be able to deliver a lot of these micro products. I think that's where the huge opportunity is.
Thank you, Ram. Moving on from problems to solutions, clearly, if you look at any InsurTech, the end goal of an InsurTech is to collaborate with an insurer or a reinsurer or become one, right? Because if you're trying to solve one part of the value chain, add efficiencies to it, the only way you could, as an InsurTech, achieve scale is by collaborating with an insurer. So it's, in my head, it has always been a collaboration game and not disrupting the incumbents. So since it's a collaboration game, I'm sure you would have, over a period of time, realized that you would need some sort of help from ecosystem to grow further from here. If each one of you could share your thoughts on what you think you would need from InsurTech, from the insurance ecosystem to help grow faster. Starting with you, Ankit,
I think taking cues from one of the event that I last attended sometime last year, Mr. Vashisht pointed out this, that the time for insurance 2.0 has come, right? This is not the time to step back, but take 2 steps forward to create not just 70 insurers, but multiple insurance companies, multiple distribution partners, multiple newer products into the market so that we can serve the needs of 1.4 billion people. This will not only require a lot of collaboration and innovation efforts from the ecosystem holders, but will also require a lot of regulatory framework support from the government or from the regulator themselves. On the front of be it providing a platform for InsurTechs to innovate newer products, it could be as simple as what RBI did with the sandbox, or providing some sort of interface where InsurTech can take some of that risk to make sure they are still operating within the framework provided by the regulator. Those could be the lines where regulatory framework support would be required, and of course more collaboration from the ecosystem partners on data. Right, that's the key to unlocking micro insurance products, small ticket size products, wherein the small SME or small business owner will actually take that risk to buy that product.
Thank you, Ankit. And Prerak, before you answer it, this is really the last question that they are answering to. After that, we'll leave the floor open for questions. So if you have questions ready, please be prepared. We would be able to take a few of them. Prerak, here.
Thanks. So, Sumit, I think, everybody, I'm going to summarize on your behalf. So what we heard from Ram was, he said, hey, there's infrastructure. He said there are multiple sales channels or point of sale channels that are at scale. We've established clearly that there's data available. We've clearly established here that there's intent from InsurTechs to want to innovate along with the ecosystem players that are there. So what a request here is maybe, right, from the ecosystem players, is the insurers in the room, the reinsurers in the room, the actuaries in the room, as InsurTechs are coming to you, right, and you're the ones taking the risk, right, for a minute as against the InsurTechs. Be open to some of these newer ideas that are coming up within the spectrum of saying, hey, what does that model show? Am I allowed to reprice, not reprice? What do we do as a proof of concept? How far can I go? How far can I come back? Right, it's really in your court now, and I think you'll find there are a lot of takers from the InsurTech side. This is just, we've heard a lot of different players here that are working within their own niche of micro pools, right, that they're wanting to look at. Similarly, I think there are tens of other InsurTechs out there today in India looking at many, many different pools across, life, health, PNC lines, right? Basically, within that, a fair bit of diversity. So it's really, I think the ball is in the reinsurance, insurance, and actuaries court now, is what I would say. The InsurTechs are hungry. Yeah.
Thank you, Prerak, for saying it in clearer words. I mean, one could not have said it in any clearer words. Mitesh, your thoughts?
No, I think, like Prerak said, we'll require more flexibility on products. We'll require more flexibility or ability to fail, right? I don't think any innovation or disruption happens without failure. We'll have to be more open to allowing InsurTechs to fail. And one very different thought, which always we have been fighting, is saying there is almost a need to have an anonymized, decentralized data pool, wherein data is not being made proprietary, right? Access to data is what makes it more collaborative, wherein we don't go to actually saying this is what we need. We should have the ability to go to underwriters actually saying this is what we need and this is why we believe this is doable, and please help us, refining it. I think those are the elements which are key now.
Thank you, Mitesh. And just to also share my thoughts on ability to fail, especially I think this is more relevant for us actuaries. It's a difference in mindset, right? We as actuaries would want to calculate premiums with accuracy of double digit after the decimal places. And that's not how any startup would work, right? They would first jump and then look for a parachute. Although I do not subscribe to that sort of way of operating, but the idea really is that as InsurTechs, they do not have luxury of data, luxury of doing all the estimations and then being super sure. It's always, if you're building a rocket, your first iteration would probably be building a bicycle. And it looks very, very different, but that's how any innovation would happen, right? So for us who are in industry for a while, we would want to launch a product that's going to be out there for 30 years and want to be super sure of it, and that's completely all right. But when it comes to innovation, I think it's important to also realize that this is more likely to fail, And we need to just be open with it, open about it. Ram.
I think, see, I would say I'll probably just put the part of it out there, again, going back to the fact on see, we have seen data, I mean, okay, fundamentally last 10 plus 12 years, underwriting risk. Okay, we were obviously a non-existent company. We were a technology company, right, based out of Bangalore, coming in, trying to sell to bankers in Mumbai. The power of how we could change the way they do underwriting. Transformation. It obviously took a lot of effort. Today we do this at scale, right? We do this at what we do roughly around 30 to 35 million requests a month, right? We deal with roughly around 600 to 700 million line items of financial data per month, right? At scale. What we have seen is the technology and the kind of data that we deal with, the fidelity of the output is very high. The segmentation of one is high, and to a large extent, we trust in God, and I would say today you can trust in data.
Yeah, I think Prerak actually summarized all of it, what we wanted to say. I'll just give you an example. We close to have a partnership with more than 200 distributors, and they end up asking every time we tell them, this is quote, this is proposal, this is payment. The first question they ask is why? They tell us, you're asking for 200 parameters to give me a quote, why? And that is the freedom that we need actually from insurers, Give us a quote which comes with a limited set of data also. Let's say for life insurance is the most complicated product that we have today. To get to a payment stage, it's more than 500 parameters on any insurance journey right now. And to convince a distributor who's paying 2,000 CR of premium every year, if we tell them that this is the process, this is how it has been done till years, then they ask why do we need InsurTech then? We'll just do it through existing portals only. So for InsurTech to survive, I think we are very much dependent on the insurers, and from them the ask is to have a modular structure on product development and break it down as much as possible.
Thank you, Karan. I guess we have time for a couple of questions. Yeah. 1, 3 or 4, yeah? So open to you. I think there's one, or people stepping out already. Oh, there's this one hand that I see right at the back.
Hi. I just have one question. Considering we have IFRS which is going to come in place, how do we see InsurTech to be a part of it, and how can we maximize the utilization of technology over there?
I don't think the deal into IFRS,
Okay.
unless you want to take, any of you want to take a question. So IFRS, in my head, would still be, from a tech perspective, would a technology solution. And for InsurTechs to be able to start solving actuarial and accounting problems, it would take some more time. And just to address it, why, right? Because if you think about it, if you're solving a distribution problem, if you solve it for life insurance, you have more or less also solved it for health and P&C. If you solve a claim problem, you could derive or build on top of it and also solve across the value chain. And those are the easier problems to solve. Those are the problems that are customer facing, and you see a direct impact. So anything which is beyond distribution, claims, underwriting would take much longer for InsurTechs to make a dent. IFRS 17 is clearly not on the radar. Abhijit, yeah.
Just wanted to understand if you have been thinking about the latest DPDP Act and how this consent infrastructure or architecture start from the time it is taken to the time it is being used. What are your thoughts? I know it is a developing area, but if you've already spent some time thinking, you can share your thoughts.
Yeah, so basically, I think the first part of the consent framework already comes with account aggregator, where this consent of basically today under the ambit of account aggregator, you have roughly around 600 FIUs, around 14 AAs, and roughly around 140 FIPs, financial providers, across banks, insurance, and capital market. Right. Now the part is, there are two parts to the data privacy bill and the data protection bill, right? Has two parts to it. One is about, so first of all, the consent as to why you're taking this data. Okay, why, what, how, when, for how long, right? But there's also a very interesting part of the problem statement, which is in your internal systems having track of this data and being able to delete this data or forget the data. Okay, the consent is easier. Consent can be built into each of your journey, whether it is your onboarding journey, whether it's your renewal journey, whether it's your claim journey. Okay, the harder part of the problem is going to be that how do you solve for what data resides within your system, how much of your data is going out, and as you think about the ecosystem expanding with, anyway, insurance is a lot about distribution, it's a lot about collaboration, it's about agent, it is about the InsurTech players, it will be about anchor, banker, all of this. Okay. Now what comes into the part is, what will come in is how this data travels, and in this part what PIIs are there, okay, and that's what I would say. So I would say, and also as data controllers, which is what all the regulated entities in the room are, and then they have a penalty of 250 crores. Okay. So as you start thinking about this, you'll have to think about two parts of it: consent, data discovery, and data separation, right? PII. So I think these are parts of it which is there, and then there is quite a bit of work which is happening in the industry. I think still early days. We'll also have to figure out the fact is, does the privacy bill kind of say that the responsibility for compliance sits with the regulator? Then we are all kosher. We don't have to worry about it. We'll say we already have compliance given to IRD or RBI, whichever the industry is. Yeah.
So, yeah, so in the past you've seen the application form, the insurer would take a general consent and then, you know, they can add any third parties. But now if they have to take specific consent, then every time the data flows out of the insurance company to any of the third party, that consent has to sort of travel and come back, and as you said.
Yes.
You know,
so that's what, I'll just give you an example, right? The way in the digital lending guidelines. Now today there is something called as key fact statement, right? And in the digital lending guidelines, there is the whole part of a RE, a related entity which is a lender. Then you have the LSP, which is a loan service provider or the digital lending agent, which should be the equivalent of your broker plus your this thing, right? So what is now happening is institutions, basically on partnerships, are declaring who do I partner with, okay, right? And it will be like the terms and, I mean, most of us don't read the terms and conditions on the phone also. Like the way on your Android app or our iPhone app, right, it says these are all the consents I need. So the journey may get divided to say these are the kind of consents which are needed and who are you providing to. Okay. And that will be the part. So that will be the framework. And then in the mechanism of the challenge is going to be the part is when you distribute data, okay, right, to a third party. It is, do you pass the data, do you pass the some kind of, I would say, anonymized or pseudo-anonymized data, correct, which goes in. And the other part is today you store all data to build your actuarial models, correct. In those actuarial models, do you think about taking this data and profiling it to a gender, basically a PIN code, an age group, income group, a health condition group, cohorts, right? Instead of storing absolute kind of data. So those would be the kind of constructs that will come in, because you would need to have this data on a regular basis. You can't recreate, I mean, either when you run your models, you kind of create the entire set again and then discard it and then do so on, but that's not very efficient. That will be very compute and cost intensive. So typically what we have, like the way the kind of data that we process today with, what we have created is we have created basically, I would say, equivalent of, think of a enumerator or some kind of a pseudocode, right, to categorize a set behavior aspect. Okay. So that will have to be some parts of the thing. So which comes, so there is going to be in your journey what you capture, which comes inbound, which goes outbound, and the data that you reside and build your models on it, that will also have to get transformed.
So do you believe it will impact the growth of insurance ecosystem or the InsurTech ecosystem?
See, actually, I think it will be great, because end of the day, it is a good, everyone has visibility onto where the data is. Okay, how is it? So all of these things will have their own set of challenges, But if we see the way account aggregators got adopted in the last 2 years, right? Okay, I just think that it will only accelerate the process because fidelity of data is something which is solved for today. Very important, right? Friction in the process is reduced.
Yeah.
So that's where the benefits are.
Thank you, Abhijit. Thank you, Ram. Any question, if we can take one more. Yeah, please.
Hello, everyone. I think someone mentioned that we have a data-rich country. We know there are many sources of data. I have a very honest question. On an execution side, can you throw some light from your experience when you actually went for execution? Is the data really available for someone who wants to develop a product? And it is kind of an iterative process that if you have the data, then you can build a product. So on the execution side, is the data really available if somebody wants to, enter into this InsurTech?
See, I talked about the fact that it's a data-rich country. So honestly, there is data, right? Okay. Now, the part is any model that's built is based on a hypothesis. Okay. Now, the part in that hypothesis, if I look at the part of it, for that hypothesis, how much of data do you have? How much of variance of data that you have? Fundamentally, to determine what's your false positive, false negative percentage. You want to keep that sub probably, idealistically, it has to be sub 1%, 0.1%, but realistically, it is sub 2%, plus or minus 2%. Okay. Now, the plus or 2% of variance in the outcome might have a few impact in terms of a loss ratio, which might be plus 5% or plus 10%. Okay, right? That's a part of it. So largely, there are means to digitize data. I mean, if I look at this part, right now we're doing this project with one of the large insurance company in Kenya, right? And then this is about fraud, waste, abuse on outcome basis. So on a data set of 100,000 cases, we are running this part. And the idea is once we are able to demonstrate, and the principal premise is nothing but 100,000 cases, we will demonstrate at least 5% savings on your claim, correct? If you're able to demonstrate that, then it's a multi-million-dollar contract for us. Okay, right? So that's the intent. So I would say at a data level, because, this is in health insurance space of it. So in some cases, because the models have been kind of developed and evolved to a certain level of high fidelity, okay, then a data set of 100,000 to or 500,000 transactions are more than enough to get a very high accurate output in execution. The other part is, but then if you're trying to build a solution which is very, very new, correct? Where you want a performance. Because in a claim, it is very simple, it's savings, right? It's on the data. But if you're thinking about creating a model for a new customer cohort or segment, it is not just it has to be iterative. Because you're going to create a model, you're going to test it out on a smaller user set, and it is not that it is going to be instantaneous feedback, right? Unlike your lights or whatever it is, right swipe, left swipe on your Instagram or a Facebook, correct? It is about a product being given, an event occurring, okay? Base is the event occurring, you have to know whether your hypothesis was right or wrong. So I would say it's a combination. If it is a well-defined problem, a large amount of data today is available to kind of test out your model. Okay. If it is a new model, it has to be iterative.
I think just to also add to it, I think the data is there. And when you said product, I think you meant insurance product. So the data is by and large there is the question of intent, right? Intent of trying to take the risk on something that has not been tried before.
Sumit, can I just add to that? So I think the other problem that collectively as an industry that we again need to solve is the idea of what are the data standards that we are adopting. So as long as, say, we look at insurance and the corresponding ecosystems, right, which is, say, the mobility ecosystem for anything that's, data coming out of cars, two-wheelers. If we look at, say, the health, right, the National Digital Health Mission has defined ICD-10 and SNOMED law standards, HL7 fire as a health interoperability standard. So there's one definition that as an industry we should collectively look to accept certain data standards which should ideally come from the government or the regulator. Right? Once we do that, then there will be a set of players that start to collect that data in that standard. And there's always incentive for the insurance ecosystem to work with players that are collecting good, high quality data, whether that's used for building underwriting, risk models, or for distribution, or for claims adjudication. So there's incentive that comes in. So if there's a problem that we still need to solve today is to say, hey, what is that mobility ecosystem data standard? How do we bring that with insurance? How do we think about agri-tech? What is the data standard there? How do we bring it with insurance? And that is, forums like this should collectively go out and start to talk about data standards with all our corresponding ecosystems where we sell insurance or want to attach insurance.
If there are any questions, we can take one. Otherwise, we'll wrap up the session. Yeah? None. So why? You have one? Okay.
I'll ask mine after his. He's been raising his hand for quite some time.
Sure.
Thank you. Hey, hi. Thank you for such an insightful session. My name is Ayan. So there are various challenges in Indian insurance market, and one of them remains insurance penetration. But the second one, which is more, I would say, my opinionated, is that the understanding of the product and the demography of the nation. So the product in itself is very difficult to understand for the people. So do you think InsurTech has a role to play there, or if you have any views on that, to make the understanding of the product more easier? That would support distribution, I would say, trying to deliberately relate with the topic. Yeah.
Just to be super short, product here means insurance product. Yeah, please.
See, at least, this is something that we had, which is, like today there is the whole PIVC, pre-issuance video call, right? Now, obviously the version that's today is very simple. We are doing this with in Vietnam as well, where the part is, it's a much more clearer explanation of what the product is, what is the benefit and all those things, and obviously being built into the vernacular aspect of it. Okay. So, that's obviously at the point when someone has taken a policy and you're making sure that you understand what you're signing up for, right? And then you have the grace period to kind of cancel it out. That's from a technology perspective, there is the ability today to kind of deliver the engagement for your customers to ensure that they understand what is the product and all those part of it. And then obviously there is enough technology to kind of take the policy, read it out, have the customer read back their understanding of it and kind of verify. And maybe then also tweet your, this thing, have either clarificatory responses and all those things built out. So the pre-issuance video call or the pre-issuance verification call is an infrastructure from a technology perspective that exists. It's about how insurers leverage that.
I'll just add on to it, if that's okay. So again, to your question, right, I think there are two parts. One is, let's accept that today products are very complex and they are not user-friendly, to put it bluntly, right? I think InsurTechs are doing a lot of work there on two parts. One is, how do you explain the complexity to the customer in a consumable format, right? Instead of giving a web page, I've seen InsurTechs actually putting out insurance exclusion in the form of Instagram stories. Right now, that's what a consumer today is habituated to, looking at stories. I've seen InsurTechs working on that, on the distribution side, saying, okay, there are 3 stories. First one is the pricing, the second is the inclusions, the third is exclusions. There are also reels being made. I've seen InsurTechs actually innovate on saying, I'll make an influencer reel which just explains the product. So a lot of work happening there. Second, simpler answer to this is, there is a need to simplify the product itself. So there is no need of explanation. It should be self-explanatory. I think a lot of InsurTechs like us are also working on that. So it's a combination of two. And to summarize, I think yes, InsurTechs are working on it because that's one of the major bottlenecks in increasing penetration, right?
And I think just to add over here, there are nowadays technologies which can help you simplify and understand these policy documents. You really don't have to go through like a 40-page policy wording, right? GPT, on top of GPT, you can build limited frameworks to type in a question and get your answer in a very simpler understanding. Add vernacular to it, it just boosts the entire performance to the next level.
I'll just, last one. Yeah. We talked about distribution, we talked about penetration. Now, we all know that the next growth is going to come from tier 3, tier 4 cities. And the biggest problem that any company will face is the selection of the customer in terms of how do I know to whom am I selling, especially when it's faceless, when my agent is not meeting him or her. We are depending on the documents that they're sending. Then how InsurTechs are able to solve this problem? Because if you are digitally reaching the customer, you are playing with that risk, but obviously you are managing it. So how are you really solving this problem in terms of knowing, first understanding the documents that you are getting or the information that is getting that is credible, and basis that you are able to price the risk the way it is, so that you are able to sell to the person maybe in the rural part of India.
Again, I can just take a shot at it. I think just before this session, the white paper which was launched, right, alternate data sources, that's one of the key ways to solve this, to go to tier 3, tier 4. And I don't think agents or human is a solution yet, because in the industry, I don't think anybody incentivizes agent to bring in a good customer. An agent is incentivized to bring the customer. Nobody incentivizes an agent on how the claims ratio of their cohort is, right? So I don't think human is the problem. In fact, digital is the only solution, because using alternate data sources, using behavioral data, a lot of behavioral data that exists digitally is how the underwriters and actuarial models will have to be built to reach tier 3, tier 4. And the adoption of data in tier 3, tier 4 is phenomenal, right? Now, if you go to tier 4, every shopkeeper still has a GPay out there, right? And the internet data speeds are at least 4G, if not 5G out there. So I think using all these alternate data sources is the only way really we could reach tier 3, tier 4 in India.
So would you differentiate someone, let's say in a tier 3 with a, let's say CTC of 10 lakhs, and someone in a city like Mumbai with a CTC of 10 lakhs? Obviously, it's a different. The person in the tier 3, tier 4 with a CTC of 10 lakhs can have a better life than someone in a place like Mumbai. But how do you differentiate there? Because when we are looking at cities of 10 lakhs, and I'm saying, okay, no, this is the same risk or a higher risk or lower risk, but how do you differentiate there with the same information?
See, okay, I can apply this in the parlance of what we have seen in the lending ecosystem, right? Because fundamentally it is ability, stability, and reliability, right? So just on a banking analysis, we can determine the ability to pay, your income versus expenses, right? Now, again, recurring income and recurring expenses, construct of it, right? Stability is about the part is, are you getting your incomes, right? Whether it could be a kirana shop, the number of transactions per day, what's the cash flow per day, right? Or it could be a salaried person, or it could be an artist, or whichever it is, right? So what is the stability, occurrence of this thing? The third is reliability. Reliability just comes from the part is, one is to figure out intent to repay, right? Now the reliability also comes from the stability of the way in which you do run. I mean, are you paying your bills on time? Are you basically, do you have a SIP? Are you paying an insurance premium? Do you have insurance of different forms and others, right? So all of this becomes just, I mean, like if I look at the bank statement, is an amazing document. And with the kind of digital penetration which has happened with all the, whatever, demon, COVID, all those things, right? Today it is a really rich document. An individual's bank statement probably has, because of UPIs, anywhere between 70 to 80 line items. I mean, and by the way, my favorite punchline is, if you see a bank statement with an 18 rupees transaction, and if you're doing a life or health insurance, that's a red flag. That's a purchase of a single cigarette.
Yeah. Thank you, Ram. While Prerak summarized the entire session for me, thank you, Prerak. I would just like to add one line, a thought on how actually should we be seeing InsurTechs, right? So if I could use the same language that we understand, InsurTechs in India is at the point in time where an actuarial student has cleared first 3 or 4 exams, right? When you clear first 3 or 4 exams, you see, oh, okay, I put in a lot of effort, but not much has changed in my life, right? So it is at that stage. Once you clear 3 or 4, life changes drastically. So before we miss the bus, this is the time to start getting more involved in InsurTechs and ride on the bus and ride on the wave that we have. That's really all I had. Thank you, gentlemen, for sharing your thoughts. Thank you for being a wonderful audience, for being patient and asking all the right questions. Thank you very much.
Thank you, Sumit. Thank you, everyone. Can I please invite Kulin to please come up the stage and give a small token of thanks to our panelists and our chair. we won't be having a tea break. We will continue with the next session. So request everyone to please be seated.